G'day guys, James here. For the first time really, I'm going to expand my portfolio into bonds because, it's long been a theory that bonds stabilise your portfolio when there's a downturn in the share market. And, people historically have recommended 60-40 portfolios with 60% stocks and 40% bonds and whatnot. Well, until now, I've pretty much kept away from bonds, but I'm looking at, ETFs, exchange-traded funds, because I'm figuring that, some of these instruments hold large numbers of bonds and the safety in numbers. Because what I'm also looking at is high yield bonds or junk bonds, things that pay 6, 7, 8% return on investment. And when you're going into higher return, higher risk instruments, you want diversification, logically, so that if one or two companies go down in a bond fund that owns hundreds of companies, it won't matter all that much. It won't cause the ship to sink. So the two I'm looking at are an Australian one, I think it's by Van Eck, called SUBD, and an American one, the largest American sort of high-yield junk bond ETF by iShares, I think, and it's called USHY, which is like US dollar high yield. I'm thinking of, buying a small position. Well, I've decided to buy a small position in each of these and just watch what happens for a while. And I don't have any experience with bonds, as I've said. But, I'm going to diversify. I'm going to give it a try. And if anybody out there has any knowledge or experience with bonds, and more particularly high yield bonds, junk bonds, comments will be on, guys. Let's hear from you. All right, guys, keep believing, keep achieving, and keep receiving. I'll talk to you soon.